premiumbeat.com. 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 What's up, everybody? Happy Sunday. Hope you're having a good day. Turn this down low. All right, y'all. So let me see here. Switch over this. All right, y'all. So real fast, we're gonna go over markets closed today, Martin Luther King Day. Not today, tomorrow, and we have earnings coming out. We have the review of the CPI and the PPI, and kind of what we think is going to happen this week coming up. So first we'll go to, let's see. First we're going to go to just some guys that are smarter than me. Let them talk about this. It's about 5 minutes long, so we'll get through this one first, and then come back. Then we'll see what Jim Cramer has to say. I'm gonna jump on these real quick, y'all. Alright, we don't got no sound. Hold on.
Down 0.1% on headline. That is lower than we expected. And if just to put it in perspective, if you look towards October of last year, we had down 0.4. So down 0.1% on headline. That is lower than we expected. And if just to put it in perspective, if you look towards October of last year, we had down 0.4. Down 0.1% on headline. That is lower than we expected. And if just to put it in perspective, if you look towards October of last year, we had down 0.4. Down 0.1% on headline.
Whoa.
Data, was it slightly too hot? We'll see what the PPI numbers bring in about 5 seconds. And remember, Rick, it's the rate of inflation rising now. All those previous rises we saw, we were still paying. Was it slightly?
Oh, absolutely. It's like compound interest, except for
Here we go.
Rick
All right,
Santelli, we're going to go to now, standing by at the CME in Chicago. We saw what happened with the CPI data. Was it slightly too hot? We'll see what the PPI numbers bring in about 5 seconds. And remember, Rick, it's the rate of inflation rising now. All those previous rises we saw, we were still paying those. So I don't know what to think.
Oh, absolutely. It's like compound interest, except for inflation isn't nearly as much fun as compound interest. And here we go. The December read on the producer price index, the wholesale inflation gauge, down 0.1% on headline. That is lower than we expected. And if just to put it in perspective, if you look towards October of last year, we had down 0.4. So even though it's good news, been there, done that in a bigger way. Ex-food and energy unchanged. That's 0.2 lower than we expected, and that would end up being the third unchanged on core in a row. And the last time we had a number that was lower than unchanged or zero was April of 2020 when it was down 0.3. Ex-food, energy, and trade, it's up 0.2 exactly as expected. That's 1/10 hotter than the rear view mirror. And the last time we were over 1/10 was September when it was up 0.3. Now, I think the better numbers here that I like to pay attention to year over year. 1.8 on headline, 1.8, 0.2 less than expectations, 0.2 less than the rear view mirror, and 1.8, let's see how far back we have to go to get a lower number. 1.8, you're going all the way back to pre-January of 2021, which is where my database comes up with 1.9, and that is lower. So that is very, very good news. Ex-food and energy year over year, 2.5. That's the same as we were expecting. It was the same as the rear view mirror, but last month was moved down to 2.4%. And just to put a face on it, 2.4% is the lowest going back to February of 2021, but we moved one tick higher than that revision. Now, what's the aftermath of this? The market likes this number, Joe, better than it likes CPI, and I can see why. We've moved down a couple of basis points. We're at 399 prior. We're at 396, 397. We're down 6 on the week on 10s. We're down 11 on the week on 2s. And European maturities in gilts and in boons, they're actually higher on the week. So we're starting to see a dual speed with respect to central banks and how markets are trying to price slowing of the economy versus central bank activity. Back to you.
So if grocery prices are 30% higher than when Biden came into office, and they're still going up like 3.4, when are they going back down? They never are.
I don't think they will, Joe. That's the whole point.
No, they never will.
That's the whole point.
What about energy prices?
If you look at CPI,
what was gas?
that CPI energy, oh yeah, we're over 80. We're over 80 now. And what's the headline in the Journal today, Joe? Just as we get back on our feet, just as the Americans are LNGing and helping out the world, there's pushback now. The Biden administration is getting pushback that we got to curtail some of this LNG natural gas activity. I certainly hope not. There's a lesson to learn here. I emailed you yesterday. I remember clearly in 21 when Mark Fields bought all those Teslas. And I remember looking at my compatriot that was in the room saying, boy, that's going to end up being a bad trade. That is going to be the poster child of why energy prices are going to remain sticky for a long time. And we're all going to be paying more for everything. That rent-a-car deal, you think that's going to translate into lower prices?
Yeah, that was something. Deciding what we're all going to be renting. What if they throw a war and nobody shows at a party and nobody shows up? That's the problem. Thanks, Rick. Steve Leisman joins us now. Thank you. Now with more, what's going on, Steve?
Well, you see yields are falling, stocks doing better. Let me just preface what I'm about to say by, if you're not confused, you're not paying attention. And here's what's happening right now, and this is what I think happened yesterday. This PPI number, which is really showing, again, deflation up the pipeline here. And I'll give you some numbers. Food down 0.9% on the wholesale level. Energy down 1.2%. That was up in yesterday's CPI. And the trade component, which tries to take a measure of profit margins, down 0.8%. What happens now is the PPI, a lot of components feed in to the PCE, which comes out in 2 weeks. What I think happened yesterday was people look at the CPI and said, well, it's a little bit hotter. But let's just wait, because the wholesale price story has been one that's been positive, at least in terms of inflation improving, and that feeds into the PCE. So I think what's happening right now is, for example, we went into this number with Fed expectations for that March cut at 69%. Now they're at 78%. Of course, this moves around. It's very volatile, and that's for the March rate cut. So this is a reset from yesterday, and the market has gotten, Joe, very sophisticated now at looking at the PPI, how it feeds into the PCE, and then resetting inflation, or Fed expectations off of that. We didn't used to talk about the PPI. You used to cut me off minutes ago. Now it's more important. Look at how the market is moving. That's what's going on, Joe.
That's big news. That's big news. As we know, interest rates are hurting.
What's inside your ETF? With PAPI, you know. Inside, you'll find.
All right, so if we go to, so this is what we got coming up this week. We have, let's see, Monday's close. We have core retail sales, initial jobless claims, crude oil inventories, and existing home sales from December. So that's supposed to be up. The expectation is higher on home sales. Manufacturing index expected to be better. 3% better. And jobless claims are expected to be higher. So we'll be looking at that. I'm going to go ahead and tell y'all I'm feeling bearish. Mainly because of the shutdown, which we know they're not going to shut down, but everybody gets sketchy when you have a shutdown looming. So the deadline for the shutdown is January 20th, which is 6 days away. So not including Martin Luther King Day. We only have a few days to trade with that hanging over our head. Miles, come on, buddy, stop. Why are you doing this? So the 20th is Saturday. So you have 1, 2, 3, 4 trading days. 4 trading days. So then we also have, Miles, you're killing me, Smalls. You're killing me, bro. Add new tab to the right. Up, down, up and down. We're going to investing, okay. Stop, boy. Go to earnings. I'll be right back. So we have this week. Morgan Stanley, Goldman Sachs, PNC. All right, so here let's do this. We're gonna watch the Jim Cramer week ahead. See what we're gonna short this week.
Hey, I'm Kramer. Welcome to a very special countdown to kickoff. I'm coming to you from Chiefs Kingdom, eve of Super Wildcard Weekend on NBC and Peacock. Taylor Swift is the 12th man edition of Mad Money. I'll be one of my friends just trying to make you some money. My job is not just to entertain, but to educate and teach you. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Sometimes when you come in too hot, you pay the price. And that's how I feel about the big bank stocks today, which simply couldn't measure up when we saw the results. I like to analogize to football. As you know, I do it a lot. And analogies break down when we talk about coming in too hot, though, don't they? Because can you really come in too hot when you have a playoff game in Kansas City where it's going to be -5 tomorrow night? Something you'll see if you tune in to Peacock at 8 p.m. Eastern. We're out here to take the measure of the game in the business of sports. But this is mad money, not mad sports. And earlier this week, I said that if we didn't get blowout quarters from the major banks, the market would stall out. That's exactly what happened today. Dow dipping 118 points, S&P advancing 0.08%, and the NASDAQ inching up 0.02%. Look, the day started pretty good with a very solid quarter, or at least it looked to me from JP Morgan, the bellwether. Plus, we had a nice cooler than expected producer price index number, making the setup seem, I'd say, darn right benign. Citi, Bank of America, to a lesser extent, Wells Fargo put up good numbers, good enough that I didn't think it would matter that their stocks came in too hot. Wrong. Even as JP Morgan opened strong, the group couldn't hold up under pressure, and a stock that initially ran up 7 points actually closed down $1. As investors said, the story played out, unless we start seeing quick rate cuts, of course. I wouldn't bet on that. So what happens every time a leadership group shows less leadership? Well, the money flows right back into tech, with Microsoft this time being the standout. That stock finished up $3.84 based on, nothing. But it was enough to pass Apple for the crown of the largest company on earth by market capitalization. Now, if you're wondering what the heck I'm doing here, it should be self-explanatory. The Dolphins coming to the Chiefs right here at Chiefs Kingdom at the GEHA Field at Arrowhead Stadium. And that's tomorrow night. You can watch it on Peacock along with 2 other wildcard games from NBC. And as a big fan of Coach Andy Reid from his Philly days, I can tell you I'm not rooting for the Finns when I do a little pregame action tomorrow afternoon, which I am very excited about. Before we get to next week's game plan, let me just say that I got a call this week from the red-hot Larry Williams, the market historian / technician whom I respect so much. He flashed me some charts to show that Bitcoin is putting in a major top here. Sell. We know that it ran up for the launch of this new exchange-traded product, and now he thinks it's headed for a nasty sell-off. I'll go into more details later, but I wanted to bring this up right at the beginning because I have rarely seen Larry so adamant and sure about this kind of call. Now let's talk about what's coming next week. We have tons of bank earnings still ahead of us, but we can't forget that the banks trade as a function of interest rates and how many times the Fed might cut this year. That's why we have to pay close attention to what Fed Governor Chris Waller is going to tell us on Tuesday. Now, he's been the most vocal Fed head when it comes to flat out saying that it might, let's say we're done raising interest rates, and instead cuts are on the way. After a hotter than expected consumer price index reading, followed by a cooler than expected producer price index, I want to know where we stand on the way. After a hotter than expected consumer price index, we have tons of bank earnings still ahead of us, but we can't forget that the banks trade as a function of interest rates and how many times the Fed might cut this year. That's why we have to pay close attention to what Fed Governor Chris Waller is going to tell us on Tuesday. Now, he's been the most vocal Fed head when it comes to flat out saying that it might, let's say we're done raising interest rates, and instead cuts are on the way. After a hotter than expected consumer price index reading, followed by a cooler than expected producer price index, I want to know where we stand. Hey, maybe you'll give us some insight. We could use it. For the opening on Tuesday, we get results from Goldman Sachs and Morgan Stanley, the 2 top investment banks. Goldman's cutting expenses, and I believe they'll tell about how a resurgent market for takeovers and a bountiful bond issuance is bringing in a lot of money. Much better time to be an investment bank. We own Morgan Stanley for the Charitable Trust, but last quarter, wow, they reported a widely panned number because their wealth management business didn't put up any growth. The stock got crushed. I wonder if new CEO Ted Pitt can change that negative narrative, or maybe they just got in some more wealth management. That would help things. One bank that can never seem to do any wrong in the eyes of Wall Street is PNC Financial. Humdrum. Now, there's no such thing as a sure thing in this business, but PNC might be as close as it gets to clockwork bullish equity, even when I don't think it should be. Wednesday morning, we hear from Charles Schwab. Not that long ago, the stock was on its heels because people were frightened about its bond portfolio. They thought it looked too similar to the regional banks that went under last spring, even though Schwab's a brokerage firm. I disagreed vehemently, and I told you to buy it, and now I feel vindicated because the stock's crushing it. I think Schwab will tell a terrific story next week. Individual investor is back. Now, there was a time a decade ago where Kinder Morgan, a giant pipeline company, was the belle of the ball. It was the blue chip of the group. Then it stumbled. You know, the stock never really recovered until now. I think KMI has its act together. And when it reports Wednesday night, I'm betting we get a pleasant surprise from the 6% yielder. Thursday, we get results from one of my absolute favorite regional banks. It's First Horizon, and I want to own this one. This was the jilted regional that was about to be taken over by Toronto Dominion at $25 a share. But then the regulator somehow blocked the deal, and the stock collapsed. Now it's at $13. Yeah, I think that's a buy. You want to read on the economy? Let's tune into JB Hunt. The regulator somehow blocked the deal, and the stock collapsed. Now it's at $13. Yeah, I think that's a buy. You want to read on the economy? Let's tune into JB Hunt's call Thursday night because this trucking company really does go over every aspect of commerce. And it's always, I'd say, both enlightening and entertaining. Darn good stock, too. Finally, on Friday, we hear from SLB. Yeah, the old Schlumberger, the oil service giant. With oil spiking today off the Red Sea troubles, does that mean oil companies will open their wallets for big-time offshore drilling? How are the producers doing with all this new technology that allows them to get more crude out of the ground with less money and fewer rigs? Is SLB still the blue chip of the group? Can there be a blue chip of the group? We'll get all our questions answered. Plus, Dow Jones Industrial Average component travelers don't talk enough about it. Also reports, and this insurance companies really matters. Why? Because the steady rise in your insurance rates have played havoc with the consumer price index. It was the leading cause of the irritatingly overheated number we saw this week other than REN. Is there any chance that the old insurance price wars could start up again, or has the industry become too disciplined? And that's going to be bad for you and me. Travelers tends to be pretty upbeat and upfront about the business. Let's pay attention. Bottom line, it is a tumultuous moment. We've already had a big run in healthcare and the banks, while tech's taking a backseat to no one until today. Could it roll over like Bitcoin? You know, we took some techs off the table for the charitable trust at the beginning of the year. Let's just say I do not regret it. And stay tuned later in the show for that work that enabled Larry Williams to call a major top in Bitcoin. You will not regret that one either. Let's go. Let's just say I do not this moment. We've already had a big run in health again. Played havoc with the consumer price index. It was the leading cause of the irritatingly overheated number we saw this week other than REN. Is there any chance that the old insurance price wars could start up again, or has the industry become too disciplined? And that's going to be bad for you and me. Travelers tends to be pretty upbeat and upfront about the business. Let's pay attention. Bottom line, it is a tumultuous moment. We've already had a big run in healthcare and the banks, while tech's taking a backseat to no one until today. Could it roll over like Bitcoin? You know, we took some techs off the table for the charitable trust at the beginning of the year. Let's just say I do not regret it. And stay tuned later in the show for that work that enabled Larry Williams to call a major top in Bitcoin. You will not regret that one either. Let's go to Elizabeth in Florida. Elizabeth.
Hi, Jim. How are you?
I am good. How about you?
Good. So I have some thoughts on American Express. It's been down for the last 2 weeks. What are your thoughts, and if it's a good time to buy now?
Okay, Steve Square reports next week. He's the CEO. I think it's a terrific company. It did go from 169 very quickly to 189. It picked up those points in a heartbeat. Therefore, I think it's two in the middle of the range. I don't want to recommend it. Instead, I want to hear what Steve has to say. He's a straight shooter. Let's go to Chase in South Carolina. Chase.
Booyah, Jim. How you doing today? Wishing you a great
doing well.
weekend.
How about you, man?
I'm interested in how you felt about Campbell's soup these days.
Not enough upside. I think the company's doing well. I think that Mark Klaus has got as best a hand as he can have. But the hand in the end is not going to be a full house. Why? Because it's packaged, processed foods, and they don't fare well in a new world of GLP-1s. It's a tumultuous moment. We've already had a big run in healthcare and the banks, while tech's taking a back seat until today. And could it roll over like Bitcoin? Time was going to tell. Well, man, money today. Are you ready for some football Cramerica. I'm coming to you from GEHA Field at Arrowhead Stadium ahead of tomorrow's Dolphins-Chiefs wild card game on Peacock and going straight to the source, talking to Kansas City Chiefs owner Clark Hunt about the business of football. Then, as I was reviewing this weekend's slate of 6 games and the 14 teams that made the playoffs, I realized many of them are reminiscent of my favorite stocks. I'm going to give you my comparisons. Plus, NBC Universal is home to a record 3 NFL playoff games.
Question? Tweet Kramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com.
All right. So we're gonna go back to I like to watch Kramer, see what he's got to say, and a lot of times if he makes a strong call on something, you can short it. So we're gonna be watching these next week. I should put them in order of their earnings. Alright, so we're going to go back to the core list. We're going to look at the SPY because that's what we're going to be trading. That's what we got a lot of our charting done on. So I want to show you guys kind of what we're looking at here. We got the previous fib levels, the previous buy and sell levels, the support and resistance levels. So if we look here, just for an example, this was a perfect call out. Set this test zone based off this trend line, based off the Fibonacci, and based off this trend line, and it tested it perfectly. Actually dropped down to this one here, and then bounced off of that. Bounced really good too. So you have the consolidation zone, public participation zone, which this would be consolidation. Someone's screaming. So let's see if we can zoom out. So we got these trend lines going. So we got the good and the bad drawn out here too. So let me zoom in on this. So the trend line is really easy, you know what I'm saying? You just draw them off the peaks in the general direction that the stock is going, and it'll reveal like a lot of times a wedge or a cone that the stock typically stays in, and then you can play those, wait for it to break out. If you know me, you know I love Zip Trader Charlie, and I watch him all the time. As Charlie says, you gotta follow the trend. The trend is your friend until the trend bends. Then the trend is no longer your friend. So you can even see right here that it's following the trend, and these trend lines go back, several days, and it follows the trend. So what we're at right now is we have new like secondary trends that have developed, such as this one right here. So we're still on track with this secondary trend right here, which is kind of more of an uptrend than we've seen on average. So what I've done here is, let me see if I can zoom in on this. So basically, if we break out of these trend lines, then we're going in a direction. We have basically almost a symmetrical triangle here. So it's going to make a move, whether it moves down and retest this line here, or whether it moves up and retest these fib levels. But like see where this trend line crosses this fib level? That's like a perfect, there's a high probability that it's going to land somewhere in here if it goes down. And then depending on how hard it goes down, it could go further. And you'll see we have this test zone. So that if it goes down to here, I'm not gonna say guaranteed, but high probability that we're gonna see some calls. Looking forward to retest. Try to come back to, because you have this other trend line here. Try to come back to some of these other levels. So we have the test zone here, and as you can see in the one I just showed you guys, this one, when I drew it, was pretty far below where we were currently trading, and it definitely, it didn't see, because you can see we was following this trend line down here, and based off this trend line here, once it dropped below this one, which happened right here, it retested this fib level. So that's why I love the Fibonacci. That's why I love the trend lines. And you also have the SMA. So I can get more into the SMA, but looking for it to do something similar over here if it goes down. And I mean, I could probably put this triangle more like right here. That's if it goes down, and that's again considering the shutdown. Any kind of news, when they have these shutdowns, it gets real sticky, because they can come out with any kind of news to move the market in any direction. They can say, oh, we've made a deal. Oh, the deal fell through. Oh, we made another deal. Oh, that deal fell through again. Like, and it'll go up, down, up, down, up, down. So the next couple days until really this whole week, or unless they come to a conclusion sooner, is going to be pretty wild. So, you definitely want to use risk management. You definitely want to stick to the charts and go with like solid setups. Don't go for any kind of guesstimation or any kind of inferences or summarization, whatever the hell. Don't assume nothing. Go off solid trades if you trade this week, but this week's definitely going to be crazy, because on the other side of that, talking about 60 to 70% interest rates in March. Holy cannolis, that's insanity. That, typically they say these things are already priced in, but right now we're at a special point in time where these type of things are not necessarily priced in, because there's so much uncertainty. So a 70% cut in March could mean a significant upside, seeing as the CPI was a little bit hot, but the PPI was a little bit cold, so they basically just washed out. That combined with low treasury yields, we could see a bull, a bullish move. We could see a move for the upside this week as well. So basically, we're just gonna watch these trend levels. I want to show you a perfect example. On Friday, I was on the Discord and had a phenomenal trade. Can I not zoom out? Where were we? Right here. There it is. Yeah, see, look, we're here. We'll get to that, but like right here, this was so perfect. This it went up, broke that. It formed a little trend line there, broke down out of that trend, came back down. That's another thing. An object in motion must stay in motion until adversely affected by an outside source, whatever that source may be, whether it's a big sell, some kind of news, a Fibonacci line or a trend line based off market sentiment or based off trader logic. Anything can change the direction of a stock. So it goes unchanged until changed. And so once it turned around here, broke. So that's why Charlie says when it breaks the trend, the trend is no longer your friend. You have to look for a new trend at that point. And you can see broke the trend, and then it broke the trend again. Was no longer going down. It started going up. So we set this trend, and it traded like this over the course of about 45 minutes. From here to here, and set these trends. Watch this go all the way up, almost to our level. But what happened was, you see right here, and I'm crushed this absolute perfect trade. Took puts up here, right here, on this candle. Took puts at the higher end of this candle, and then wrote them down to yay. That was about a 60, I think it was 65% return on that trade. Fantastic trade. I don't remember why I drew this line, but either way, what happened up here was, so charting kicked in, told me, you have a hanging man right here, which went way out of trend. And I mean way out of trend. Even though the candle closed right on the trend line, the next one formed and dropped below again to form another hangman. Um, Waited for perfect entry, took perfect entry, and I could have held a little bit longer. But the thing about out of the 0 days to expiration, same day expiration calls, is you don't want to hold them too long, because time decay will hurt your God, my bad. I believe my camera's frozen. Time decay will hurt your profit. Time out. Okay. Yeah. Yeah.
Can you take knocks or no?
Give me like 10 minutes.
10?
Yeah.
Okay, because he just woke up. And then you won't leave me alone. And I really got his back.
Alright, I'm streaming right now.
Oh, you see the lights? Why is it clear brass? Because that's clear doing it. Oh, that's so cool.
Oh well, y'all don't need to see my face.
You said what?
I'm streaming right now. Sophie's just back here talking to me. Sophie's just back here talking to me. Okay, so either way, waited for that to break trend, and as you can see, it broke out of that. You could almost call it like a third or fourth generation trend. I don't know how you say secondary trend. It broke out of that one back for the downside, but it's still staying within this wedge that we've drawn. So looking for this to trade into this wedge the same way it did into this one until it meets a force which changes its trajectory. In this case, that could happen after hours. So I mean, I don't really know how to play that or what to say is gonna happen there. But I'll be honest with y'all. I kind of feel bearish about next week. I feel like next week, with this government shutdown going on, I feel like it should go down. But with that being said, everybody else probably thinking the same thing. Except for the fact they're probably thinking that a deal's going to get worked out either way, so they want to lean towards the positive news. We're currently sitting at 476. I think all-time high is 479. So we're still on the high side. So, I'm more inclined to believe that we're going to go down, but it could definitely still go up. So, again, next week's going to be super choppy. Very volatile, very dangerous. So risk management, risk management, risk management, risk management. And for whatever it's worth, the way that I like to do is I like to use if you have a cash account on Robinhood or Webull, you can do unlimited day trades. I don't know when or how that happened, but you can do unlimited day trades. You can basically trade as long as you have settled funds available. If all your money's unsettled, you're done. You're done for the day, which is not a bad thing. I mean, that puts a cap on it for people so they don't just trade into oblivion. But either way, where was I going with that? Oh yeah. So when I trade, I like to take like 10% trades. So 10% of my account. So in this case, I have in this account, I have a Webull with 1,000 and a Robinhood with 1,000. So I'm up, $200. No big deal. But basically, we're doing 10% trades. So I'll try to put only $200 into a trade, and then look for 20, 30, 40, 50% gains. So I like to trim at 20% unless I'm like struggling to get there and it's too nerve-wracking. Then I'll just take profit at 20%, or I'll trim at 20% if I think it's gonna keep running, and then I get out at stop loss out at 10%. So if the stock drops immediately or within that first couple minutes below 10%, I typically like to either A, trim, or B, close the position. And then C, or on the other side of that, if the stock is if the stock goes up to 20% and we trim, then we bring the stop loss up to break even. Or it just really depends on how solid the setup is. If you're not too sure about the trade, if you feel good but not great about it, then just be super tight. But if you feel great about the trade, if it's a high probability momentum and you're in and the chart's telling you everything you need to know and it's a good deal, shit, let it run. You know what I mean? Just continuously keep that 10% trailing stop loss all the way up. And then yeah, that's best practice on trading. And honestly, that's probably one of the biggest things that get people. And I traded paper trading for a long time, almost a year, and that really helped me discipline myself and understand how to trade without using your emotions, how to trade just like a robot. And statistically speaking, if you trade like that, you'll never lose. You'll always be up approximately 5%. And as you know, if you don't know, another thing that paper trading taught me, started with the 10K, got up to 220. Last day I traded, I had like on that account, I had like $70,000 day. I just posted a video of it, but it's like the previous video on YouTube. But either way, it's a slow grind at first. It took me like 6 months to get that 10K up to like 60 or 70. But once I got 70 to 100,000, it was almost just too easy doing that method, because it got to a point where I was having, 20, like 15, 16, 17, 18, 25, 34, 48, $70,000 days. Just practice, because it's all a percentage game. So you just stick to that and practice that and stay true to that. Don't let anxiety get the best of you. Don't let greed get the best of you, and just let the shit go. Just knowing in the beginning it's gonna take a while, but it does work. So that's all I got for y'all tonight. I appreciate you stopping by. Sorry for the technical difficulties. If you don't know, which I know you know it, I'm new at this, but the system. I'm not new at trading. I'm new at social media videos and stuff like this. But what I do, I've helped some good friends and helped them make some good money. So I'm just trying to share that for now and help share my knowledge and my wealth, as it may be. So thank you again, everybody. Hope you have a great night. I appreciate y'all. Until next time, peace.
Premiumbeat.com.